Hey guys, welcome back. So today we'll be going through some more market commentary, just looking at what's happening on the news and trying to understand what that means in terms of adoption, and then looking at some coins. So today we have this article. It says GSBN partners with ZAN to harness Web3 to tokenize EBLs. So what the hell does that mean? So basically GSBN is the Global Shipping Business Network. They are a supply chain blockchain consortium. ZAN is like a blockchain services company. Web3 is Web3, and EBLs are electronic bills of lading or bill of ladings. So just going through this article, it says that the Global Shipping Business Network, a not-for-profit consortium enabling efficient, paperless, and sustainable growth in global trade with its data, infrastructure, and ecosystem of partners, has partnered with ZAN to explore technical innovations for tokenizing the electronic bill of lading with the support of Hong Kong's Web3 environment to unlock new economic values for participants in global trade. So what does this all mean? What's the purpose of them partnering? Why do we need to tokenize bills of lading? What is the actual use case here? So what is the use case here? So to understand the use case, we first need to understand the existing problems within the bill of lading value chain. And you can see here on this diagram, this is how they do it currently. So the bill of lading is issued for sea freight shipment. It goes on the ship, and then to claim the cargo, the owner has to present to sign the original bill of lading document. It can't be a copy, it has to be original. And I believe that is by law, you actually need the original. If you don't have the original, then you actually can't claim the cargo. So the bill of lading is actually what you need in this whole process. It's equivalent to the cargo. If you don't have the bill of lading, but you have the cargo at your port, you don't actually have the cargo because you don't have the bill of lading. So the old way is basically they send this document through transit. And I believe the original document, it goes through a bunch of different intermediaries like finance and different logistics companies because they all have to do their own checks on it. And basically what blockchain does is if you tokenize the bill of lading, then you can actually just transfer the ownership of that electronic bill of lading directly to the new owner. So it just saves up on all of that time. And it's not the same as sending it through an email, because through an email, you don't know who the owner is. But with blockchain, there is a record that everyone can see on the network that this person is the new owner of that record or of that bill of lading. So you can transfer the ownership of that bill of lading. So that complies with the laws of bill of lading, where you actually need to be in possession, or you need to own the actual original document. So just going into a little deeper, they need to issue the original document. They need to be signed. It needs to be checked by multiple parties. It's inefficient, could get lost. There's fraud, there's delays. And basically, just to summarize, basically the blockchain just does that all digitally. It improves turnaround time, reduces inefficiencies, it's tamper-proof, eliminates fraud, instantaneous transfer, cost efficient. But the value add of blockchain in this case is not only cost efficiency, it's also, because it's tokenized, you're unlocking different use cases for it, or different things that you can do but you couldn't have done before. So this is just an example of that. Multiple parties can sign a single contract all at once, whereas you couldn't have done that before. You have to send it to multiple different parties one at a time. There's also this whole trade financing market that opens up, and that's all because it's tokenized. So we know the use case, we know the value proposition, but why is it important for us? Why is this use case even important? If we connect it to what's been going on in recent years, the whole supply chain industry has been disrupted heavily. There's been just a lot of reshuffling around of shipping routes and stock and demand mismatches. And anyway, there's just been a lot of problems around shipping. We can see here that Maersk has actually been cutting more than 10,000 jobs. The post-pandemic period has been one of sustained weakness, with daily rates now hovering at 2019 levels, down 95%. The weaker market has cut freight costs for big retailers. So essentially, just it's a very pertinent topic at the moment, the whole supply chain thing. I remember I was doing a business selling electric bikes, and I couldn't actually get any of my product because there was no shipping going on. That created a lot of backlog, and I had to end up closing that business down because I couldn't sell anything. So yeah, it's just a lot of issues going on with supply chain at the moment. So we know the value proposition, we know that it's important. We know that these companies, they do collaborate, but there's still inefficiencies, there's fraud, there's delays in the system. And there needs to be some driving organization, a powerful organization that is driving this new technology into the marketplace. And we see that here with GSBN, the Global Shipping Business Network. They are a large consortium of big shipping companies. So we can see that here. This is important to look at because we want to see that this big organization is putting pressure on other organizations to adopt this new technology. Going back to my example again in the last video, it's like a language. Excuse me. If everyone is speaking English, then you would want to learn English instead of learning some other language, basically. So same goes here. If everyone is on this network using this new EBL technology, then it is in your interest, your competitive advantage to adopt this new technology. And if you don't, you're going to fall behind. Oh, and by the way, if you have time, just watch this video. This really explains it. It's a really good video. Okay, so now we know there's a big organization driving this. How big is the market? How big is the scope of the market? So shipping is massive. Just the electronic bill of lading alone could save 6.5 billion in direct costs and enable 40 billion in global trade. So that's massive. So we know the market is big. We know there's an organization driving this. What could be a barrier? Regulations is always something that is interesting to look at. And blockchain regulations is a very slow moving process at the moment, especially within finance. But when I just had a Google search here and I was just looking at regulations within supply chain, and it seems like it's singing a different tune. In supply chain, it seems like they look like they are a bit faster in accepting that this is the new sort of paradigm, like new technology needs to be adopted to make things better. And we see here in this article here, the blockchain bill that doesn't mention blockchain. UK leads the digital space race in trade. So this talks about the Electronic Trade Documents Act, commenced on 20th September 2023. The UK is the first G7 nation to pass such legislation. The law transforms a paper bill of lading into a digital asset. A bill of lading is a bearer of instrument for the consignment of goods on paper. So this kind of plays into the whole real world asset tokenization trend that we're seeing. It's really cool to see that regulators within supply chain have said, yeah, let's move forward with this. I think we probably think it's going to make things better. And it's just really cool to see this. This is not the only bill that I've seen as well. There's also the Digital Container Shipping Association. And there's also this, maybe not related to shipping, but in aviation, I know the One Record initiative by the IOTA, which is like the big aviation association, which is also digitizing documents. So it seems like in supply chain, the regulators are a bit more amicable to new technology. And we see here in this article here, it says 100% EBL by 2030. So this is really cool to see in terms of regulations on supply chain. It's singing a different tune to finance. Finance seems a bit more, I'm not too sure about this. Can we think about it? So now that we know this, let's put where blockchain and supply chain is on this little diffusion of innovation graph here. So I think we're past innovators for sure. We're definitely not in late majority and late mass. So again, it falls in between here somewhere. I would say it's interesting because the benefits are not so observable. There's not maybe I have to have a deeper look, but there isn't much data on how much EBL actually saves. And I don't know, I get the sense that shipping organizations, I don't think they're as tech savvy as, like, say, banking organizations, say. I think they're more old school. So I don't think there are big moves that big moves in adopting this new technology yet. Whereas you compare it to banking, like pretty much every bank is adopted like blockchain technology. It seems like it anyway. But it's interesting because we see regulations are more friendly in supply chain. So if I had to put it somewhere though, I would put it in early adopters. We're definitely not in the early majority yet with supply chain. So we're further behind in finance. So just knowing that information, what do you do with this information? So just knowing that basically we're here, there's good regulations, they're only beginning to talk about the benefits. If you get in the market here, you're very early. You're still very early, which means you have more chance to gain more money. Yeah, who knows really? But anyway, it's interesting just to know that. Okay, so now we know the value proposition. We know why it's important in the real world. It solves a real world problem. We know that there's a big organization driving it. There's good, friendly regulators kind of in this early adopter stage. Let's go through some coin inspo. I'm going to suggest some coins that you might be interested in to look at. So the thing you have to understand with these big enterprises is that they use certain technologies here. So if you look at this little image here, Hyperledger Fabric, that's a private blockchain. There is no token for it. Ethereum here, it says Ethereum, but it's more like enterprise Ethereum, which is like a private version of Ethereum. Quorum is also Ethereum, but private version of Ethereum for like finance. R3 Corda, that is like a private sort of blockchain as well. So they use they don't use the public blockchains yet, but we can see here that kind of Ethereum here is standing out. And also just out of interest, these enterprises, they use multiple different blockchains. They don't just use one. They use like a mix of things. Oh, look, there's the Hedera Hashgraph here. I know a lot of you like Hedera Hashgraph. But yeah, my point is they use a range of things, and they combine that using interoperability to build a solution that provides them the right mix of things that they want from each of these technologies. So the first coin inspo we'll be going through is Polygon. Polygon is a layer 2 with Ethereum, but they're pretty much Ethereum now anyway. And the reason why I'm suggesting this is, of course, we've seen a lot of Ethereum market acceptance here, but Ethereum, it's slow moving, it's slow scalability. Polygon speeds that up through zero knowledge proof technology. So it's a technology that gives you privacy. Yeah, basically just gives you privacy. I'll leave it at that for now. We can see here, Ernst & Young launches Ops Chain Supply Chain Manager, incorporating zero knowledge proof technology for business operations. Seems here they're designed for the Polygon Nightfall network. So it's a supply chain application built around enterprise privacy using Polygon. So take a look at Polygon if you like the sound of that. The next one is, again, we have Chainlink here. I mentioned this in the previous video, but Chainlink is really involved in the tokenizing of real world assets. So if you can tokenize an electronic bill of lading, that's a tokenized real world asset, basically. Chainlink is going big into this market. I think they're more focused on financial, like stocks, bonds, and property and stuff like that. But that's not to say they can't expand the market into like commodities and actual physical like assets. So have a look at Chainlink. Chainlink is really cool. Those are the two large cap coins I would suggest you have a look at. Then we have a low cap coin under $1 billion is XDC. XDC is used as a settlement token. It was based off the XRP token, and basically they're going big into trade finance. If you can tokenize an electronic bill of lading, then there's all kinds of cool trade finance related stuff you can do with that. And XDC is building the network primarily for that. XDC is also cool to look at because they are the settlement coin on R3 Corda. So R3 is this massive consortium of, I don't know, 500 plus banks. XDC here, you can see here, is used as a settlement vehicle inside the Quora ecosystem, allowing value to move freely between Quora public network and public blockchain networks like XDC network. So this is really, I suggest you take a look at this. They're low cap and they're getting this kind of usage in the market, real world usage. This is really interesting to see. Take a look at XDC. Moving on here, we have Morpheus Network. Their supply chain blockchain, just primarily focused on supply chain. I believe they're EVM based, so they're compatible with Ethereum. Give this one a look because they're completely focused on supply chain. So they might build in things that the other networks don't particularly have, that maybe a particular client in supply chain might, or a shipping client might appreciate, because they're focused on supply chain. So this is a micro cap, so 100 million. So very interesting. Take a look at Morpheus Network. Now, there's still problems involved in this whole shipping technology, new technology, and those are basically interoperability. So I'm showing you Quant here because Quant is the interoperability solution in the market right now. We need interoperability in electronic bills of lading because there's so many different shipping companies, different providers that they may use different technologies other than Ethereum. And that means because they use different technologies, we need all that to speak to each other. And that is what interoperability is. So if you like the idea of if you want to get rich in a gold rush, you sell picks and axes. This is the picks and axes for the developers to connect everything up. And then also another one I'm suggesting here, IOTA. They are a large cap, both Quant and IOTA are large cap. And basically IOTA is an Internet of Things network. This is important because sometimes you can't exactly tokenize. Like let's say you wanted to tokenize a physical asset, I don't know, a bike or something. How do you do that? You can't, maybe you have some documentation for that bike, but you're not exactly tokenizing the bike. You're tokenizing the documentation of that bike. You see what I mean? So if you wanted to actually tokenize that physical thing, that physical asset, you need some kind of sensor, some kind of IoT device installed onto it. So this is where IOTA comes in. They're connecting all the IoT devices through the network. And if you like the idea of that, yeah, just give a look at IOTA. Okay, so that's it, guys, for this video. Give me some feedback on how do you think this market commentary is going. I really appreciate it. And yeah, thank you very much. Goodbye.